So you've heard the news. Brian To'o from the Panthers is going to the PNG Chiefs. And I think his signing has brought something into focus that most of us haven't really stopped to think about just yet. Wayne Bennett has been talking about it, the South Sydney coach. He says that PNG has an unfair recruitment advantage. Michael Chammas from the Chiefs says that the clubs knew about the tax arrangements when they agreed to the expansion. And the boss of the NRL, Peter V'landys, well, he says he doesn't see the unfairness because the salary cap is the same for everybody. And they're all talking about the same issue, but I don't think anybody has properly really examined or explained what this concession could do to the player market. Because it doesn't just help PNG sign players, it could change what players are worth across the whole competition. So with 6 players now signed by the Chiefs, let's pull back the curtain a little bit on what these tax concessions could actually mean in practice. Because if you want to know what's really going on in sport, you've got to follow the money.
And now it's time.
It's time!
It's time for
Moneyball.
Moneyball.
Are you familiar with the story of Moneyball?
Hey team, welcome to Moneyball, the business of sport, the show for sports insiders and for fans that want to know what is really going on in the game. I'm Scott Keenan, and if you like the show, please subscribe on YouTube or wherever you get your podcasts. So everybody's been talking about it, but do we really understand what's going on with the player market in the NRL now that PNG is able to operate with its tax-free status? And before we get to Brian To'o, I do want to have a bit of a look at the facts because there has been plenty of debate about this issue. Lots of people have opinions, and I think it's valid for people to have their own opinions, but I don't think there's been enough explanation. The PNG Chiefs are not getting a bigger salary cap. When they enter the competition in the NRL in 2028, they will operate under the same NRL salary cap system as every other club. The difference isn't the salary cap. It's what happens after the player gets paid. So as part of the agreement between the Australian and Papua New Guinea governments, eligible Chiefs players and staff will get tax exemptions designed so their employment earnings aren't taxed in either country. Chiefs CEO Lorna McPherson has said that that arrangement will remain in place for 10 years. Peter V'landys has also backed that in. He said that earnings that players make in PNG will be tax-free. And there has also been some reporting around third-party agreements that players will make while they're working in PNG. And it's possible that some of those earnings could also be considered under that tax-free status too. But I don't have a lot of detail on that, and I don't want to get into that too much today. But whether you think that it is a good idea or a bad idea isn't really what this episode is about. I do think personally PNG does need some recruitment concessions because it is a unique expansion club. Players are going to be moving countries, families are relocating, there are security arrangements there, there's certainly longer travel times from that home country to matches in Australia and New Zealand. And they're joining a brand new football club. Things are different. It's going to be a challenge. I do think there should be some incentives. The question is, though, how powerful is this particular incentive? And what could it do to the player market? I think Brian To'o's signing from the Penrith Panthers gives us our first really good case study to examine. So let's have a look at the numbers. And Fox League has produced some estimates in the last couple of days about Brian To'o's contract at around $600,000 a season. So even before we talk about tax, he brings so much experience and a winning culture. 4 premierships, State of Origin series. He's an international player and undoubtedly one of the best wingers in rugby league history. I mean, why wouldn't any club want to get their hands on him, including the PNG Chiefs? And I reckon most clubs would probably look at $600,000 for Brian To'o, even as an older player now, and think that that is pretty good buying. But here is where the maths changes a little bit. If Brian To'o receives $600,000 tax-free, an Aussie club, or the Kiwis for that matter, the New Zealand Warriors, would need to pay roughly $1.07 million under today's tax rates for him to finish with roughly the same amount in his bank account. And that's the first thing that I don't think has been properly understood. And it isn't because anybody's hidden it. Michael Chammas is right. The clubs did know about it. The NRL sanctioned it, and we've all known that it was coming. But I don't think it's been fully explained very well. And I do think that there are some other factors here that are going to cause some other impacts on the player market. Let's just zoom out here a little bit and we'll have a look at what the PNG Chiefs have done so far and the players that they've signed. Those numbers I said from Fox League have reported what those contracts are estimated to be worth. Jerome Luai at $1.2 million a season. Zach Lomax, $750,000 a season. Brian To'o, $600,000 a season. Connor Watson coming from the Roosters via the Dragons at $500,000 a year. Matty Lees, the player from the UK at $450,000. And Alex Johnson from South Sydney Rabbitohs on an estimated $250,000. Those are the tax-free numbers. It's approximately $3.75 million in reported contracts for those players. And remember, those are media estimates, not official disclosures. And you will have also seen Joey Manu's name floating around as well, and some numbers prescribed to what he might get paid if he went there. He's playing in Europe in rugby at the moment. He was a Sydney Roosters player and a New Zealand international, but he isn't on that list right now. They've assembled that group while spending only around a third of the NRL's last published top 30 salary cap. And of course, by the time 2028 comes around, we can expect the salary cap will increase. And they've barely started to build their roster. It is looking good with those 6 players. So what is PNG's salary cap actually worth compared to other NRL clubs? So this is where we need to be a little bit careful, but it's also worth examining. Some people say they have a bigger salary cap, and obviously they don't technically, but the concessions do mean that they do in practice. Now, you can't simply convert their entire salary cap into an Australian equivalent because players all earn different amounts of money, and the Australian tax system for income is progressive. But we can do a bit of an experiment to understand the scale of the advantage that I think is in place. Take the NRL's last published top 30 salary cap of $12.1 million. Now, imagine, purely to make the maths simple, that you divided that evenly between the 30 players in an NRL top 30 squad. That'd be about $403,000 for each player tax-free. So for an Australian player to take home roughly $403,000 after income tax and the standard Medicare levy, their gross salary would need to be about $697,000. So $403,000 take-home pay, $697,000 in gross salary. Now multiply that across 30 players in that top 30 squad, and an Aussie or Kiwi club would need to spend almost $21 million in gross salaries to generate roughly the same amount of take-home income for their players. Now, I'm not saying that PNG has a salary cap of $21 million. Obviously, it doesn't. The actual number will depend on how much each individual player earns. It scales up and down, of course. And like I said, we don't even know what the NRL salary cap will be when PNG enters the competition in 2028. But as a simplified comparison, it does give us some idea of the purchasing power of this concession, and that is where I want to go here. That is why saying the salary cap is the same, it doesn't really explain what is happening. The number might be the same, but what that number can buy definitely is not the same. And here's the bit that I think some people have missed or maybe have misunderstood. Most people look at this and think that PNG can pay players more. And actually, I do think the point is a bit bigger than this, because PNG doesn't necessarily have to pay more. Imagine another club values a player at $600,000. Now, PNG could potentially offer $500,000 tax-free, and that player keeps more money in their pocket. PNG would spend less of its salary cap, which the NRL says is the same as other clubs, and the $100,000 it saved can now be spent on somebody else. That is how the economics start changing here. The salary cap definitely hasn't changed. It is the purchasing power that has changed. So that's the first thing I wanted to talk about. But up next, I want to get into what that could mean for the player market, not just for players that PNG does sign, but for every player that comes up for a new contract over the next 10 years. Okay, so here's the part that I think could have a big impact over the next decade or so, because PNG doesn't have to sign your player to have an impact on how much another club might have to pay them. They just have to bid for that player. So let's do another experiment here. Let's just imagine your best player is coming off contract. Say it's Reece Walsh at the Broncos. He loves the club. He's won a premiership there. His kids are settled in Brisbane, and he'd actually prefer to stay in the city. But his manager now has a credible tax-free offer from PNG sitting on the table. The manager walks into negotiations with the Broncos and says, look, my client can earn this much after tax. What can you guys do? And maybe your club doesn't have to match it. Maybe the player ends up accepting less to stay in Brisbane, but maybe the Broncos have to find another $100,000 to get closer to what the player might have earned in that tax-free scenario. Maybe it's another $200,000. Maybe they have to restructure other contracts or even let another player go to fit Reece under the cap with the increased wage that they have to offer to kind of offset the bid that's been made by PNG and that tax-free benefit that he would receive there. Suddenly, PNG hasn't signed Reece Walsh, but it has changed the way that the Broncos might have to manage the salary cap and their top 30 players to fit Reece in the future. And that is why I think the Brian To'o signing does matter here, because now we're seeing some real-world consequences that could be at play with this tax concession. The player market isn't just about the players who leave your club. It's about the price that everybody else has to pay to stop them leaving. And that is when I think this starts to get really interesting, especially for the Penrith Panthers. Other clubs too, of course, but when Nathan Cleary's name keeps getting mentioned as a possible target for PNG as their first halfback, it then becomes a question for what the Panthers do. Do they let him go because he can get tax-free money at PNG that's more than they're willing to offer? Or do they have to increase their own bid, which would result in a bigger gross salary to Nathan to keep him? And that then potentially puts the rest of the cap out of kilter and means maybe, as well as Brian, they have to let another player go in order to keep Nathan beyond 2027. So have we seen this before? Well, we've seen expansion before, and expansion clubs have always had some advantages, whether they're in a new city, a new geography. The Broncos entered the competition with an enormous appeal for Queenslanders to either go home or to join their local team in the Australian Rugby League competition, later to become the NRL. Melbourne benefited from some pretty unique circumstances as well that were created by the end of the Super League war. And they signed quite a few players from the Hunter Mariners, which was the Super League team in Newcastle, which was folded when the two competitions came back together. And they won a premiership in their second year. That was largely because of the investment sitting behind that team, and they were able to build a really great roster from the players that came available from the Super League and the ARL competition coming together. So expansion clubs building strong rosters isn't new for the NRL, but the mechanism here is a little bit different. It isn't geography, and it is not the aftermath of the Super League. It's a financial concession that has been deliberately built into this expansion model. And before this signing, before the Luai signing, I think the tax-free concession probably felt like a concept to a lot of people without too much meaning to fans or even to clubs who were considering how it might work in practice. But now we are seeing how it is working in practice. And to me, it's no wonder that Wayne Bennett and probably a few others in clubland are starting to ask whether the concessions have gone a little bit too far in giving the PNG Chiefs an advantage over the other 18 NRL clubs and how they fit everybody into their own salary cap into the future. So not too many opinions here from me. I really wanted to sort of analyse this based on the facts, having a look at the tax system here and how it will work in practice. I don't think the most interesting question here is whether PNG deserves concessions. I do think that they do deserve some concessions, like the Bears do as well, and I know that they have received some concessions in the last few days. The more interesting question is understanding what those concessions actually do because, look, Peter V'landys is right. The salary cap is the same, but after running through the numbers today, I don't think that is the whole story. Because the thing that determines who builds the best roster isn't the number printed in the salary cap rules. It's how much the player value that money can buy. And now that the Chiefs have signed 6 established NRL players, including Brian To'o, I think we're starting to see the practical impact of that policy and those concessions for the first time. Not just for PNG, but for every club that sits across the negotiating table from them over the next 10 years. It will be fascinating to watch, and they are in a great position to build a great rugby league team with significant buying power. Fascinated to know what you think about this as well. Jump in the comments and get busy on YouTube or on Spotify. I'd love to know what you think about how this taxation concession is playing out in practice. It's going to be tough to build a team, but you're either doing a good job of it so far. If you enjoyed this episode, please subscribe on YouTube or follow Moneyball wherever you get your podcasts. Until next time, thank you for watching and listening. And remember, if you want to know what's really going on in sport, you've got to follow the money. I'll see you next time.